Hey there, welcome back to Money Hacks. In today's video, we'll be discussing why Silicon Valley Bank collapsed. As you may already know, this tech lender abruptly failed, triggering the most significant financial crisis since 2008. Was it the result of Trump-era regulation rollbacks, risk mismanagement at the bank, sharp interest rate rises, or perhaps a combination of all three? Let's dive deeper and find out. Trump rollbacks. The first reason experts believe Silicon Valley Bank failed is because of Trump-era regulation rollbacks. In 2018, a law supported by Congress and signed by Donald Trump undid some of the credit requirements imposed under the Dodd-Frank banking legislation brought in after the 2008 banking crisis. Dodd-Frank required that banks with at least $50 billion in assets undergo an annual Federal Reserve stress test and maintain certain levels of capital as well as plans for a living will if they failed. SVB's management argued that the $50 billion threshold was unnecessary, and his bank, like other mid-sized or regional banks, does not present systemic risks. However, raising the threshold would increase the likelihood that a large financial firm with assets of between $100 BN and $250 BN would fail. Joe Biden says he wants Trump's rollbacks reversed. SVB's management. The second reason is the bank's management. The bank didn't have a chief risk officer, CRO, for some of 2022, a situation that's now being looked at by the Federal Reserve. SVB's previous CRO, Laura Izurieta, left the company in October, but stopped performing the role in April. Early SVB shareholder lawsuits are said to be looking at the key vacancy, especially as the board's risk committee was meeting frequently before the bank collapsed. The bank has also been accused of prioritizing social justice over financial management. Still, the loans to community and environmental projects were not central to its collapse, nor are its diversity, equity, and inclusion (DEI) policies dissimilar to other banks. Inflation and interest rates. The third reason is the inflation and interest rates. SVB had benefited from more than a decade of zero-money interest rates as billions poured into the bank via tech venture capital. Looking for some kind of a return, it put the money into long-term U.S. Treasury bonds. But when interest rates started sharply rising last year, and depositors demanded higher returns, the bank was forced to sell some of those bonds at a loss. When news of that hit social media, tech investors panicked, triggering a classic bank run. From there, it took 36 hours for the second biggest bank failure in U.S. history to materialize. Conclusion. So, these are the main reasons Silicon Valley Bank collapsed. Federal investigations have begun, and lawsuits have been filed. However, investigators are likely to uncover more problems at the banks as their inquiries continue. Those revelations may trigger more financial crises in the future. We hope you found this video informative. Please leave a comment down below if you have any questions or want to share your opinion on this topic.